Ladies and gentlemen, good day, and welcome to the Matrimony.com Q1 FY26 earnings conference call, hosted by ICICI Securities. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then zero on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Jairam Shetty from ICICI Securities for opening remarks. Thank you, and over to you.
Good afternoon, everyone. On behalf of ICICI Securities, I would like to welcome you all to Q1 FY26 earnings call of Matrimony.com. From the company, we have Mr. Murugavel Janakiraman, MD and CEO, Mr. Harigovind Krishnaswamy, Chief Financial Officer. The call will begin with brief management remarks, followed by Q&A section. I would now like to hand over the call to Mr. Janakiraman for his opening remarks. Over to you, sir.
Thank you, Mr. Jairam Shetty. Good evening, everyone. As mentioned in our last call, our growth momentum picked up in Q1 compared to Q4. With the various initiatives and strategies, we are highly confident of continuous growth in the coming quarter. For the full year, we believe we are on the track to achieve double-digit growth in year-on-year billing. In Q1, on a consolidated basis, we achieved billing of rupees 126.2 crores, a growth of 10% compared to the previous quarter and 7.4% year-on-year. Revenue is at rupees 115.3 crores, a growth of 6.5% over previous quarter and decline of 4.4% year-on-year. This was due to the revenue to billing ratio gap. Key highlights for the matchmaking business Q1 are as follows. Billing at rupees 125.3 crores, a growth of 10.4% over previous quarter and 7.8% year-on-year. Revenue at 114.1 crores, a growth of 6.6% over previous quarter and decline of 3.8% year-on-year. We added 2.62 lakh paid subscriptions during the quarter, a growth of 6.9% over previous quarter and decline of 0.8% year-on-year. The average transaction value for the matchmaking business grew by 3.3% on compared to the previous quarter and 8.6% year-on-year basis. We have facilitated over 28,000 successful marriages through our matchmaking platform. Now coming to the marriage services business, billing were rupees 88 lakhs, a decline of 28.1% over previous quarter and 26% year-on-year. Revenue was rupees 1.3 crores, a decline of 4.4% over previous quarter and 35.8% year-on-year. EBITDA level loss for the quarter was rupees 3.3 crores as compared to loss of 2.2 crores in the Q1 of FY25. This not only marriage services, it also includes other services, the new initiative as well. On the billing and revenue outlook for Q2. For matchmaking business, on year-on-year basis, expect to post either a double-digit or high single-digit growth in Q2, but a decline compared to Q1 as Q2 is a seasonal quarter. Marriage services and other services expect to be higher than Q1. Let me hand over to Harigovind, our CFO, to comment on the key profit items.
Thanks, Muruga. Our EBITDA margin for the matchmaking business in Q1 is at 17.6% as compared to 17.7% in Q4 and at 22.6% a year ago. The drop in EBITDA margin is largely due to a temporary drop in revenue to billing ratio, which will flow to P&L in the subsequent quarter. Marketing expenses for the matchmaking business in Q1 were 46.7 crores, broadly flat compared to Q4, and 47.1 crores a year ago. Excluding marketing expenses, margins for the matchmaking business stood at 59% versus 61% in Q4 and 62% a year earlier. On a consolidated basis, EBITDA margin in Q1 is at 11% compared to 10.8% in Q4 and 16.7% a year ago. Tax rate for the quarter stands at 22.5%. PAT is at 88.4 crores, a growth of 2.6% on a quarter-to-quarter basis, but a decline of 40% year-on-year. Share of loss from Astrovision, our associate company, is 19 lakhs. Cash balance at the end of Q1 is 330 crores. Return on capital employed is 9.1%. On the outlook for Q2 margins, we expect PAT to be at similar levels of Q1. I would like to end with the customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statements that may be made from time to time by or on behalf of the company unless it is required by law.
Thank you, Ari. Now we can open up for questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and one. The first question comes from the line of Premalal, an individual investor. Please go ahead.
Hi, sir. Good evening. I'm from Hyderabad, sir.
Yes, Premalal, please go ahead.
Yeah, sir. Every year in that your advertisement cost, it could be 180 to 185 crores you are spending, right, in the sales of 40% on the revenue. If you could reduce that advertisement, it will impact any business. That is one question, sir. If you can reduce that advertisement cost, profitability will increase, no? That is the one question, sir. And you are having a 320 crores cash on that. You are looking any new verticals? Because in the market, I am not quoting any company name. Used car one side, they are quoting at market cap 11,000 crores, but anyone can replicate easily. But our niche matrimony is it cannot replicate anyone, right? So, but are you looking for new verticals and all? Two questions, sir, my side.
Okay. Regarding the first question, in terms of you reduce the marketing spend, with the profit increase, yes, definitely. But again, no. We continue to evaluate the opportunity to optimize the marketing spend. And we are able to do that, and in fact, we are able to allocate some of the marketing towards the newer initiatives. Where the marketing overall remain at a similar level, well, there is within the matchmaking, there is a shift in the marketing spend in our offerings. We in fact started investing in elite matrimony, which was not the case a year before. So while the overall marketing at this level, we expect to remain at this level for the coming quarters, while they are reducing some of the offerings, while also stepped up in marketing in some of those areas. So yeah, there is opportunity to reduce marketing, depends on whether we are able to optimize or depends on how the market scenario, which will definitely do it. But at this point of time, the outlook on the marketing spend will remain at a similar level. And we'll come to other one in terms of whether we are looking at any opportunity in US. Yeah, we are investing in one of the areas with many jobs, the exclusive of engineer job in Tamil Nadu. We expect to that get monetized from this quarter onwards. So that's something we're already investing in one of the areas within the matchmaking. But within matchmaking, there are initiatives as well. There is allow.com. We're going to launch a new product at the end of quarter 3. Which we believe that will be a right product for the segment which we are looking at targeting. And continue to evaluate within the offering the wedding services. We are figuring out new things, which we continue to evaluate. So Yeah. Thank you so much. Hope that answers the question.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. We take the next question from the line of Jairam Shetty from ICICI Securities Limited. Please go ahead.
Hello, am I audible?
Yes, please go ahead.
So, one of your competitors has, its billing revenue has grown around 36%, while our billing have grown only 10.4%. What factor explains this gap? Is it primarily because of location? We are north-based and we are south-focused. Is that the reason? Or any other reason you want to point out?
See, the thing is that, I think the same partner, the company you're talking about, one part of the revenue has grown by 30% because there's a change in the business model. So then a change in the business model when the revenue drops to 30-40%, when again change the business model to the earlier model, the revenue to bounce back to the same percentage. So that's largely thing. Apart from that, in a small base, there could be opportunity if you make some improvement, there can be an uptake also. So, it's difficult to, it's not about the business that running at the similar stage for many years. There is change in the business model, and the business model was also changed for the player you are talking about. So the matrimony case, there's nothing else change in the business model. We continue to operate at the similar business model while trying to incubate new businesses. So the reason is already explained over the last year why the big growth. Now once again we started growing. Actually the profits are back and our strategy is also yielding results. We expect the growth to continue at the right single digit or double-digit growth. We are confident of a double-digit growth on billing this year. But the gap will may take a couple of quarters to catch up. So I think I would say that it has to do with the way the change of business model and how the once again gone back to the earlier model was one of the main factor that sort of maybe leading to the growth and all the things. But I'm sure they may have done some things also. Again, the scale and size also are different. So we continue to do whatever best we can to tell the growth.
Okay. Thank you, sir. And also, please share update on the new initiative which have undertaken, like the Astro One mini job platform. How much traction they are getting. Can you share some detail on that?
Many jobs, it's doing well in terms of the number of downloads and the registrations. We are in Tamil Nadu alone. We are at million downloads a year, and we have more than 5 lakhs of registered job seekers, and around 10,000 people are actually using it. Again, at this point in time, it's all free, and we intend to monetize from this quarter onwards. And probably in the coming quarters or year, we know that is done. And in terms of rating, it's a better rating and serving the right customer segment. Again, it's too early because any internet business take many years before you see whether the business is succeeding. I would say that still at the very, very early stages, but I believe we seem to be on the right track. The other thing, the astrology, we are still in the, we're trying to figure it out what the best business model. We are trying to do some bit of AI astrology and combination of AI plus a human astrology. That's the thing we're trying to figure it out. We say that astrology, we're trying to get the product market fit right. So we are just experimenting certain things.
Thank you for your answer. This is my last question. Are you planning to do any buyback or issue any dividends?
Buyback, we are done 2 buybacks, and the board will continue to evaluate. And we are again, maybe we are still in the, normally every buyback there's a 1-year gap. I think after 1 year, the board may decide to evaluate this opportunity, and the board will decide.
Thank you. Thank you, sir, for your answer.
Thank you, Mr. Jairam.
Thank you. The next question comes from the line of Damodaran from Acutus Capital. Please go ahead.
Thank you for the opportunity. While your billing growth was around 7-8%, if I look at subscriber, which is around 2.5 lakhs, that's been broadly in the same range for 3 years now. So, what's the outlook there? I mean, is it that we have saturated on our key markets? Is that the thing, or why? I mean, why is that not going? So, just one question on that, and related on the ATV. I mean, most of the billing growth was led by ATV. So, have you increased price, or is it just because of increase in share of assisted and alike?
There's a combination. Definitely there is a partner services also doing well, and also there's the mix of packages as well. So while the growth is definitely compared to the previous quarter, that there's increase in the billing volume compared to previous quarter. And while year on year they look same, but there's a ATV increase because of the partner services, and also we also have the 1 year package. All these things are contributing to increase in the average transaction value. In terms of the billing growth, yes, the billing growth is has moved up compared to previous quarter. But in terms of gap revenue, yes, there's a gap again because of the mix of the packages. Yeah, we continue to take various initiatives to drive everything, whether the average transaction value, also in terms of number of paid subscriptions. We continue to drive. So we believe the combination of both the factors. One is that number of paid transactions, ATV. Both the factors put together will help us achieve the double-digit billing growth.
Sure. I mean, and on profiles, are you seeing growth in profiles now that was released for last year?
Yes, definitely the profile growth is happening. And also I want to add one point here. Basically because of the last year the degrowth which happened for a year. So while the profile growth is back, we also seeing the growth in the fresh volume. And the renewal volume is yet to catch up. It may take a couple of quarters for renewal volume to catch up. So today we are talking about the volume. It's mainly coming from the increase in the volume coming from the first time payment. So it will take a couple of quarters for the renewal volume to catch up. So whatever the volume you able to achieve, in spite of the degrowth in the renewal on account of the last year degrowth. So while the first time volume moving up, so net overall volume remains intact. So there's a drop in the renewal volume, which was compensated by the increase in the first time volume. So the good thing that the profile the growth is there. The first time volumes are moved up. The renewal volume will take a couple of quarters to catch up. When that happens, then the growth will the renewal volume also contribute to the growth. That's the reason we feel that the double-digit growth and for years also coming that happened from this year, and we expect that also to continue after that also. And apart from the driving the average transaction value in terms of the growth in the partner services and other initiatives also aiding the growth. So that it's basically now the volume, instead of the drop in renewal volume, we are able to have the volume of 2.6 lakhs compared to the previous year, we are able to achieve it.
Sure, that is helpful. And on advertising, just wanted to check on how is the competitive intensity across the regions. Has it changed, or is it broadly similar to what it was last year? And you also mentioned that you are recalibrating in terms of while the overall spends remain same, you have tweaked internally the amount of spends that you are allocating for different segments. So could you throw some light on what the changes have been from your end and what you are seeing in the market?
We definitely see there is some reduction in some markets. However, increase spend in some markets depends on the competitors, the different objectives. So while there is some drop, but it's still at a level which is more than we believe what is required. So again, it's varies from market to market. And because of seeing some opportunities in the same cost, we also now looking at investing behind the initiatives like elite matrimony and other initiatives as well.
Sure. Just one last question on your employee spend. So, if you look at your employee cost, I think you've rationalized in terms of over the years for last 5-6 years. I think you've rationalized your headcount as well. I mean, now it's dropped around 2,700 employees. Earlier, it used to be more than 4,000. So is that largely done, or is there more scope for efficiency gains from this line item? And additionally, one more observation was you do mention attrition rates in your annual reports. While that has broadly slightly come down, but overall it seems fairly high. I understand that this is largely led by the frontline staff, which is, I mean, in this industry, that's the norm that you have around 90-100% turnover. But is there any scope of reduction there? So just wanted your thoughts here.
No, definitely. While definitely there's scope to reduce, leveraging AI, so which you continue to look at, to optimize wherever it's possible. But at the same time, we'll be investing behind the growth initiatives as well. Also, the growth in the customer services, that means we have to add relationship managers, or the growth in some initiative, we have to add people. So while we continue to do both, leverage AI, drive process improvement to drive the efficiency, at the same time, where the growth is happening, where you have to add associates, we'll do that. That's on the people's count, head count. So coming to the attrition, definitely the attrition between organizations coming down because we are taking various initiatives to drive that in terms of engagement, plus also making associates to succeed and perform so that because most of the attrition, you may know that is happening within the first 3 months or 6 months. We are looking at various initiatives. We definitely see that some of the initiatives are yielding results, but again, we have more initiatives in the pipeline. We are introducing some of the initiatives. We believe that will further reduce the attrition. So probably next year, we'll see that the attrition will further going down on account of some of the initiatives. We believe that it helps us to ensure the associates are contributing, at the same time engage better so that the attrition levels come down.
Sure. Thanks. That's all from my side. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. We take the next question from the line of Premalal, an investor. Please go ahead.
Sir, our competitor also advertisement spend same kind of percentage, and instead of buyback, spending in new vertical is the best way. I guess that's my view.
Yeah, sure. Again, we don't have the full information about because the marketing spend has 2 components. One is the digital marketing spend, there's also TV marketing spend. TV is something we use to monitor, we can know what's happening across the market. But again, it may be difficult to understand the digital spend because that's something we wouldn't know that. So we don't know what is the exact percentage until it's a listed company. So again, the board will decide on buyback and other things. So that will board will decide at the appropriate stage.
Thank you.
And yeah.
Thank you. We take the next question from the line of Vasudevan, an individual investor. Please go ahead.
Hello, gentlemen. Good evening, sir.
Good evening, Mr. Vasudevan.
I attended our company's AGM today, but there is no big target or ambition set for you for the next 5 years, sir. And also there is one more thing. Your top line and the bottom line has been muted for the last 5 years. It has not shown any great deal of improvement. It is rather static. Why don't you set some big goals which will drive the team, sir? And one more aspect. What is the update on new business, sir? Astrology is an area with huge potential, sir. I think we have not capitalized on that. Your view, sir. Thank you.
Thank you, Mr. Vasudevan. In terms of look at the current billing rate, it's matchmaking alone we are on the 500 crore billing rate. So it's not a flat, and the growth was little muted, but it's not flat. And now this year, matchmaking alone we are looking at from the current run rate itself 500 crore the run rate. And so while definitely we have that ambitious plan, 5-year plan, obviously that we are not talking publicly, so So that definitely was ambitious plan. There comes the other one in terms of new initiative. Yes, the new initiatives, which I told of, there's many jobs, there are wedding service also. We are trying some initiatives. It's not same as what it was. We are working on some interesting initiatives there, and we have some traction in Tamil Nadu. Again, still too early to comment on that one. So many jobs we already told we are into to monetize from this quarter in Tamil Nadu. Depends how it's going to take. In terms of, these are the initiatives, but in terms of astrology is in highly contested. Again, we are trying certain things. It's still too early. And so we are trying, as I said, we are trying to do AI plus human combination. So it's in very, very early stage. We want to figure it out whether we are able to make this model successful. We are working on it, and probably in our maybe coming quarters, probably have some better update on it.
Thank you. The next question comes from the line of Abhishek Banerjee from ICICI Securities Limited. Please go ahead.
Hi, Janaki sir. My first question is with regards to the competition in this space, right? What would be your sense in terms of market share, and how has it moved over the last 1 year? If you could give us some sense there, that would be really helpful.
Since we don't have because public available information of all the players, it's difficult to comment on how the market share moved up. Okay, we can only go back what the information available publicly a couple of years ago. Definitely, we have more than 50% market share. I don't know the 55 or whatever. I don't know what the exact number. Now what is standard because we don't know any public available information of all the players.
But sir,
hello?
Abhishek, are you there? Ladies and gentlemen, we have lost the line of the participant. We'll move on to the next question. Before that, ladies and gentlemen, if you wish to ask a question, please press star and 1. We take the next question from the line of Abhishek Banerjee from ICICI Securities Limited. Please go ahead.
Yeah. Hi. Sorry, I dropped off from the line. So I'm just trying to understand that, given Jeevan Sathi has been growing at a much faster clip, albeit from a lower base, right? That would imply that our market share would have come down. So you still think we are above 50%, at least in India?
No, absolutely. And as I was sharing that, since we are quoted Jeevan, again, the few years ago, Jeevan Sathi had a degrowth of 30+% because it changed the business model. And once again, they reverted back to the earlier models. Like obviously, they are doing some stuff and they should be getting the growth and all. So I think when I think about it, because of drop in the base and once again, they're going back on the earlier model, and that's also obviously they are trying what are the initiatives. There's a lower base, and they have that kind of growth. And so that's my response to that. And as I said, now well, last year was a challenging year. This year things are coming back, and we were able to achieve the growth, and it will set up for the renewal volume. When that happens, the growth will be further better. That's why we feel that in the coming quarter, renewal volume also will move up, and that's the reason we're able to say that this year we expect a high single-digit growth or double-digit growth on the billing volume, matching volume, crossing or touching the 500 crore this year. That's the current run rate.
Understood. And so, with regard to the northern markets, how do you really think we can, make a larger impact there? Are there any specific strategies that we will be, adopting to ramp up our share in the northern markets and even eastern markets?
Yeah, we are working on probably next quarter or something, probably able to communicate better, because we are just discussing what should be the approach should be towards our northern market. As one of the markets that that we are not able to make any significant progress, on driving the market. But we are working on some strategies. Hopefully, next quarter we will be able to probably communicate better on it.
Got it. And with regards to the matrimony, the marketplace business, right? Wedding business. So, is there a product market fit that we are seeing, or is it going to remain at this level? I mean, when can we think of a scale up happening here?
Yeah, it's a good question. And we are changing the model, and that's something being piloted in Tamil Nadu. We are working on the commission-based model, and so it's in the early stages. We believe that instead of the subscription model, getting a commission on the service offered, I think that's something we believe that may be the right strategy. And we want to achieve the product market fit and decent uptake. While you're able to get people to pay some money to avail the services, and we are working towards increasing the fulfillment rate of the people interested in wedding services. So that's something we're working on it. Once we're able to get the product market fit, actually decent scale and size, and also on the fulfillment rate, then probably we'll take that into other markets. So it's not that what it was earlier in terms of simply a subscription business model. While that may continue, but the focus mainly on the commission-based model. So that's what we are attempting to do in one market.
Understood. And I think the question on the astrology bit is very relevant. And I think as we see some of the numbers that these online astrology platforms are kind of showing, it becomes even more important for a company like you. So anything that you are really working on there that you can speak of?
Yeah, we are working on AI astrology, and we also going to invest some money in one of the startups that working on AI astrology, and so that's also happening. While internally we are trying to do our AI astrology, we're also going to put the money into a company startup working on AI astrology. So we are doing what we can internally with Astro Free Chat, with our AI model plus combination AI plus human. The company we are going to invest is completely on AI astrology. We want to do our side, but also exploring opportunity on this, our companies working in this space.
Understood. So any last thoughts on how any shareholder returns, buybacks, etc. That you are planning?
That's something the board will decide. When the buyback period is over, and the board will decide whether they want any buyback or something that will happen. Dividend we already declared, special dividend was an account of anniversary, and also today the AGM also declared dividend. So the board will decide what kind of payback to shareholders at appropriate stages.
Got it. Thank you. Thanks. Those are all my questions.
Yeah.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. As there are no further questions, I will now hand the conference over to the management for their closing comments.
Thank you, Mr. Jairam Shetty. I think one of the points I want to say that there's almost like 11 crore difference between billing and GAAP revenue. If the billing and GAAP revenue being the same, could have added additional probably around 8 crore into the profit. Again, as our CFO said, the coming quarters, the GAAP revenue also catch up. So while the Q2 will be a similar level on account of one is seasonality plus also the billing to GAAP revenue, the continue of the GAAP, we expect the number to move up from Q3 onwards, and to not to large extent, the GAAP revenue will improve from slightly from Q2 and Q3, and so the profit will increase from the Q3 onwards. But the Q1 is indication of the billing and the operating things. That is that the same GAAP revenue means billing being the same. The profit have been probably around 17 plus crore also. Okay, that's the point I want to say that, and thanks for the continued support.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, Please like, share and subscribe to Concall India for latest upcoming Concall.